You have more options than you think when you buy your preferred home for retirement. The good news is you can use the home equity for which you've already paid to have more retirement-friendly power home buying options. By the time you retire, your home equity may be one of your largest assets. During your working years, the average homeowner pays 9% of their monthly income to their retirement accounts, but 19% to their mortgage, and often a much higher percentage, about 30% of their income to their mortgage when retired. After paying in so much to your mortgage, shouldn't you be able to use your home equity, your money, for your retirement? In a typical retirement account, such as an IRA or 401k, you use the same account to put money in during your working years and take money out during your retirement years. All of your retirement accounts are designed to be put in reverse. You put in during your working years and take out for your retirement years. Mortgages work differently. You probably used a traditional forward mortgage to buy your home. Forward mortgages help you buy a home you otherwise might not be able to afford by paying cash. That's one reason they are so widely used. With each mortgage payment, you build equity in your home. But traditional forward mortgages are not designed for you to access the home equity you've built. While your home equity is in a forward mortgage, it is illiquid and not accessible, so you can't use it to fund your retirement. The only way to remain in your home and access your home equity without having the burden of a monthly mortgage payment is to use a reverse mortgage. You may not be familiar with the reverse mortgage because it's not an option until you're age 62. Imagine not having a mortgage payment in retirement. How would that change your retirement picture? To access your home equity without having the burden of a monthly mortgage payment, a unique benefit of the reverse mortgage, you need to replace your traditional forward mortgage with a reverse mortgage. If you were looking into purchasing a preferred home for your retirement, using a reverse mortgage may provide you with more options. We call it retirement-friendly power home buying. Retirement-friendly because reverse mortgages have no monthly mortgage payments, and power home buying because you may be able to buy more home with no monthly mortgage payments while preserving more of your precious liquid funds for retirement. Let's look at the example of Bill and Sue. They are homeowners. Bill is 70, Sue is 68. They're looking at homes to fit their retirement preferences: single floor, lower maintenance, modern kitchen and bath, and to be close to their grandchildren. We'll assume an appraised price for Bill and Sue's current home of $600,000. They will need to pay 3% in closing-related fees and 3% in realtor fees, totaling 6%. They will net $564,000 from the sale of their current home. Bill and Sue do not want to have to pay a mortgage in retirement, so they can stretch their other resources further and do more of the things they've been planning. Their first option is to use approximately all their cash from the sale of their current home to pay for their new home. Using the pay-all-cash strategy, Bill and Sue will not have a monthly mortgage payment, but they will not have cash left over because all of their cash would be tied up in their house, illiquid, and not used to fund their retirement. Bill and Sue's second option is to use a reverse mortgage to help them buy a comparable home with the same price. Using a reverse mortgage to purchase a home is often called a HECM-for-Purchase strategy. Using this option, Bill and Sue use some of the proceeds from the sale of their current home toward the purchase of their new home, but borrow the rest from Movement Mortgage, their lender. They will have no monthly mortgage payment and will have some cash left over as an additional retirement resource, a retirement-friendly strategy. Bill and Sue's third option is to purchase a larger house. Bill and Sue use a reverse mortgage to power home buy this larger home. They contribute all of the proceeds from the sale of their current home, and they borrow the remaining amount from their lender, Movement Mortgage. Even though they used all of the proceeds from the sale of their current home and borrowed an additional amount to purchase the larger home, by using a reverse mortgage, Bill and Sue do not have to worry about making mortgage payments until the last one leaves their new primary residence. They get the larger home but don't have to pay a monthly mortgage payment, making this a retirement-friendly power home buying strategy. Bill and Sue's realtor helped them find their preferred house. Their Movement Mortgage retirement mortgage professional designed their reverse-for-purchase loan, and their financial advisor integrated their home equity into their retirement strategy. All of your retirement accounts are designed to be put in reverse when you retire. Now you have a way to put your home equity for which you've already paid in reverse to create more retirement options. To see how a retirement-friendly power home buying strategy can expand your options, schedule your free consultation today. We'll take it from there.